In the last week's analysis for US crude WTI, I had told very clearly that it has formed a double bottom here at 70 and it is trying to rise. And if you see it trading above this zone, certainly you can expect again $80 levels. And interestingly, oil has claimed $80 levels. Now, what to expect next week? Is it a reversal or is it going to drop from here again? Which position you should take in this last week for year 2022? How to make profit trading US crude WTI. We will see with the help of charts and indicators. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon, and which will keep you updated with the daily targets which I share, daily analysis which I share for US crude WTI along with natural gas early in the day with the Asia session. So do watch that also. Let's start. And yes, towards the end of this analysis, I will give you the trading levels and targets for next week. So do watch till the end. Now let's first have a look at the daily chart. See, here is the double bottom formed at $70. With that, it has also shown a reversal, and we talked about this in the last analysis. Now, couple of retracements here, and then this took off from here, and it has claimed $80 levels again. Now you already know the next support level is at 75 and 74. Only and only if you see oil trading below this zone, then you can confirm that it is going to trade bearish again, else there is a possibility for it to reclaim the higher levels again. Now if you look at the daily charts more in detail, you will observe a couple of things here. See, this is the downtrend which has started recently, few weeks back, and now it has come out of this trend. So possibility exists that it may try to reclaim this zone at 80, 84. Now if this is going to happen this week or not, that is the question. But yes, possibility exists that it may try to reclaim this zone, else trade sideways for this week and then bounce back in the year 2023 only. And then you can say the next target is 85 and then 92, 95 zone. But now let's have a further detailed look. See, here the accelerated drop we have seen in the recent past, but if you consider a little more from here, you will find oil has been trading in this channel. Now this is a channel from July onwards, July till December. So what is the highs of this channel are now at around 90, 88, 90 zone. So there is a possibility that if it continues to trade bullish from here, we may see it hitting the zone at 88, 90, and yes, only and only if it trades above 90, we can confirm that there is going to be bullishness. Now this is applicable for next week also, not only this last week for 2022, but also for the first month of 2023. We will be looking forward to these levels. This is one expectation. So possibility exists that once it trades above 80.02, you can expect first target at 81.8, 82.4, and then we can directly expect it to land for 83.5 and 84, and then the next stop is going to be at 86.2 level. So yes, this is possible this week itself. Let's have a further detailed look here on the weekly. Now what we saw on the daily charts, look at the weekly charts. Lower highs are getting created, lower lows are getting created, but at the same time look at these two candles. It has formed double bottom. It failed to achieve the bottom and reverse since then, but it at the same time right now it is shy of the highs of this channel. So once it trades beyond 82 levels, certainly, and then 84, certainly you can confirm that we are going to look forward to these levels again. If not this week, then possibly next week. So what it should be considered, that this should be taken as a expanding triangle, the highs of this at around 92 levels. This is one part to it. At the same time, if you look closely, this is how it appears to me, and only if it breaks below the zone at 70, furthermore bearishness can be expected. Right now it is looking forward to 84, 85 zone certainly, and only if it breaks beyond 90, consider that is little bit bullish, and then breaking 92, it will be flying for in the year 2023. Now this is on the weekly charts also. Now on the weekly charts, we did see that, look at the bottoms here. If you connect this dot, you will find that it is almost at the same lines. Let me draw it. Now in last multiple analysis, we did see that if you connect the bottom from here, that is 2021, the crude oil WTI has achieved the bottom thrice, that is precisely this line, and this is the fourth attempt and $70 levels. This we had talked about previously also, that if it drops $70 levels, certainly be a good support. It has achieved those levels and not trying to reverse. So should we consider it for a reversal? Possibly yes. There could be similar waves which we can see, as it has been trading in this expanding triangle since then. Since 2021, we have seen oil trading in this expanding triangle. The highs of this are possibly beyond 100, 120 levels. So there is a possibility that it may consolidate here and then take away, take out or take off from here. So this is another way to look at on the weekly charts. Now let's come back to the now see on the monthly candle the story is a bit different. It has achieved lower lows here. This is just the second red candle after this greener candle. It is just the second red candle. Now if you just connect the dots, lower highs, lower lows, and on the upside it has to pass by the zone 92-90 zone, then you can consider that whenever you see, if possible next month, next to next month, in January, February or March, whenever you see it trading above 90-92, consider this for another 10 to 20% rise, which may bring it till towards 110-120 levels. This is a futuristic prediction, but right now I'm claiming this levels here, and you very well know that what we claim we achieve. Right now if you look at, see, first green red candle, the second red candle, now this possibly may try to give you an increased or a enhanced body. That is a possibility that if it is bearish, it may try to pull it a little down and bring back again till towards 75 towards the end of this year, that is next week. Else, if the bulls are taking it over, it has to break past and sustain above this. It has to in fact go till towards this zone in order to trade bullish next week. Probably we may next month, probably it may try to close in green, and then in January we may see it flying away from $85 levels. So that is another probability, and this is why I say once you see it trading above 80.04, there is a higher probability that it may try to achieve 82, 84, and in fact try to go till towards 85. At the same time, yes, opening below the zone and trading below 79, 78.5 levels, you can expect that the closing should be somewhere here at 75 levels. So both the ways you need to look at. We have seen on the weekly chart that a greener candle, two greener candles in a row and still getting lower highs. It means there is a probability of a pullback. And the second observation is on the upside, the resistance at 80, if it sustains, certainly it can try to trade more bullish from there. So this is another way to look at it. Now let's have a look with the help of indicators. What does the indicators are indicating? See, when you analyze, you need to look at both the perspectives. You need to look at all the perspective rather when you are trying to predict a move here. Now look at the daily charts and you will find that it is trading above the 20 period moving average, which is now again at 75.76, trading above this, certainly indicating little bullishness. Now at the same time you can see this 20 period moving average is now curving upwards, indicating it is trying to gain some bullish momentum. I'll wait for it to cross pass by this 50 and 100 period moving lines, such that in order to trade bullish, and this is only possible that yes, if it sustains above this zone at 90, certainly we can expect that probability from there it might take off. Now look at the daily charts also. If you see, it was trading bearish since last couple of months and now it is traded for a bullish move. It is still trading with little divergence. The stochastic has come back to overbought levels. The MACD has crossed over here. This is divergent and bullish. This is looking upward. This has a potential for it to trade bullish. It still has some room for it to continue with the bullish momentum. And if you look at the RSI, this is also looking upwards here, showing the strength. Now look at the weekly charts. On the weekly chart, the 100 period moving average is around 82.4, is going to give it a little resistance, and then this zone at 85, which is also 20 period moving average. So till in between 82.4 and 85, there is going to be a little more resistance for crude oil to break past. By only above 85, little more bullishness can be seen. On the downside, yes, it was trading outside Bollinger Bands, and that is why we can see this pullback here. Now still lower highs are only seen, and hence you need to be cautious of 80.02 levels. Beyond that, only little more bullishness can be confirmed. Now see, on the weekly charts, it is still trading bearish since last 6 months. Now it is trying to converge. Let's see if it crosses over in future and trade bullish from here. The stochastic on the weekly charts is also oversold, now trying to come out of the oversold zone. It traded at bottom for a while, tried to pull back. Now again at the bottom, trying to pull back. The MACD is also at the bottom. And see, this is almost at the bottom, now trying to converge from here. This time it tried to cross over, failing to do so. Now again it is trying to cross over. Let's see if it crosses over for a bullish move. RSI is trying to look upwards from here, showing little strength. Now look at the monthly chart. On the monthly charts, it is perfectly positioned in the middle of the Bollinger Bands. Also look at the monthly charts. If you look at it closely, if oil sustains below 70, the next support zone first at around 60 566, and then at around $60 levels is the base for crude oil now. Even if it tries to drop, this should be the base. Beyond that, uh, chances are less that possibly we may not see it trading below 60 soon. Now see on the monthly chart, it is trading bullish so far, trying to cross over for a sell-off. Right now it is still in the buy zone, but look at the stochastic. See, it traded overbought for months and now it has come to oversold zone. Now trying to reverse this trend, probably this monthly closer might end at around 84, 85, and from there it may try to take off further for the month of January, February, and then try to break past 90 or $100 levels. I will be watchful of that. But on the MACD, on the monthly charts, look at this. This is divergent. This is bearish. This is looking downwards. This is indicative that there is room for oil to break further. So this is a contra indication here. Now this we saw last here in 2008-9 when it has achieved this peak and then dropped sharply and achieving the bottom, then it is reversed. Now this time too it has, see, these levels are achieved almost 20 years after, and now it is looking downwards. See, similar formation here, though the slope here is sharp, here it is little bit gradual, and this also indicates that there is a probability that it can achieve the peak for little while before it tries to converge, and hence one need to remain cautious here till the time oil trades below 90 to 95 zone. There is a probability for it to trade in red, and this month also, probably next week if it trades below 79. One thing is it can try to go till towards 82 and a drop from there is expected. So till 82.5 one need to remain cautious, and below 79 certainly you can expect another round of bearish move, might take it till towards 76 and 75 levels, which is a very strong resistance zone. So now considering this, let me give you the trading levels and strategy for next. And yes, if you want to learn this art of trading profitably and equip yourself with the right tools and strategy in order to profit, you can join my mentorship batch. The next batch, that is the 18th batch, going to start on 9th of January. Be a part of it. Do not miss this opportunity and reach out to me for more details if you wish to join this batch. My Telegram and email IDs are mentioned in the channel and video description. Just ping me on that and I will revert with the details. Now where to buy? Only I will recommend you to buy at 80.4 here. 80.0, actually 02, but I will recommend to buy at 04. Now beyond 80.04, the next target I will recommend is 81.2, 81.8 and 82.4. Now remember, one point I would like to mention here is till 82.4. See, when a candle has to show you a swing, it can try to take it a little high and then drop from there, and hence till 82.4 you have to remain cautious, because till then there is a higher possibility, there is a very good possibility that it can reverse and trade bearish. So till 82.4 you need to remain cautious. On the upside it can reverse any point of time, and hence you need to trade with a trailing stop loss, or always keep shifting your stop loss to your first targets, and if possible close some of your trades here and then re-enter if you see in trading in the same direction beyond 82.4. My target is 83.5, 84 and 85. 85 is going to be the maximum resistance zone, and possibly a closing there. We will see how it behaves in the month of January. That is one aspect to look at it. The next way to look at it is if it trades below 78.8, you can sell for 78.2, 77.4, then 76.5 and then 75. Now this is going to be a very good support for crude oil for next week. This may try to close at around 75. This may continue with the divergence we saw on the MACD in the monthly charts. This will further bring it down, and possibly we'll see how it behaves in the next month. But then on the upside, then for next month in January, $85-$90 levels are certainly going to be the limitation, are certainly going to be the boundary which it may not try to break, and hence take your positions accordingly. On the upside 82.5 you should watch out for, only above which you can expect little more bullishness. Till the time it trades below 82.5 there is a possibility of a drop, and on the downside till 75 it has got very good support. Below 75 again then there could be more bearishness. which might take it for 74, 72 and 70 levels, which are again going to be a very good support. Take your trades accordingly. Trade with a stop loss, trade with a trailing stop loss. Thank you very much. Have a great profitable trading week ahead. Thank you.